Hi, everyone. Welcome to our market talk. Another interesting 2 weeks have passed, and oh man, what a day! What a day! I'm sure we have a lot to talk about. Seeing all these tweets from Musk and Mr. President, and we will talk, of course, if it's noise or if it really matters, and of course about our views about the markets. But before we start, I want to remind everyone that my Fractal Range is a management platform to help investors, retail and professional, to manage their portfolios and manage their risk. And we have a free trial for 3 weeks, so everyone can try our platform risk-free. Just go to myfractalrange.com and sign up for a free trial. So, Raphael, what's going on? I'm sure you are enjoying today's drama online from Musk and Trump. But yeah, what changed in your views during these 2 weeks and what you see in the market?
Okay, so yeah, of course, I'm enjoying the day. Not much actually changed. 2 weeks ago, I was saying that I was gonna be much more conservative for the next few weeks, and so far it's proven the right choice. I mean, we've been stuck in a range on yes. We were talking about it before the show. There is zero momentum to the upside right now. So of course nobody's going to take risk in that environment. Volatility could be back, so I'm going to talk about what I see in the VIX maybe in the next week probably. Maybe it will give an opportunity to get some kind of deep buy, but yeah, so far no momentum. So very tough market to trade. I did try a long on yes on the yearly open break. I'm going to show that also on the chart, but got stopped out today. I was watching Tesla for a buy, and the buy didn't come. I mean, and then I saw the tweet because I was not watching Twitter. I was watching the market, and I was like, it went to monthly target and just like a knife in butter. So I was like, okay, that's strange. So yeah, no chance there. I took a long on oil several days ago, last week. Just a quick trade, and I'm going to talk about what I'm still looking for to take a swing. I did try one more time to short the Euro USD, only to get one target and get stopped out one more time on this one. So my bias is making me do things maybe I should not do. And yeah, before I go to the charts, I mean, my current thinking is easy money was made on the bounce after the sell-off that we've had, and people are trying to long for the next leg up, and because there is no momentum, this leg up is still not coming. So people are getting chopped to death, and I'm wondering what will make people come back to the market. So yeah, anyway, let's dive into the chart. Okay, do you see, Vi?
Yes, yes, I see.
Okay, so the plan was to get looking for a reclaim of the yearly open, which we got actually on I think it was on Tuesday. That was somewhere here. But the problem was, I mean, we still got the chop, like insane chop, back below the yearly open, right back to the quarterly level, and then tried again, and look what happened today. We are back at square one. So clearly, no momentum. The market had its chance to run, and it's still not doing it. So my overall thinking is still to remain very conservative. You need momentum to see the next leg up, and clearly we are not getting it. So if you want to take a swing, again, the same advice I gave 2 weeks ago, it's not right now. As for Europe, I was expecting a chop for DAX and CAC. So far, this is what we are getting. I mean, CAC is going nowhere. DAX is going nowhere. So very tough to find a place to park your money. So I mean, I got nothing very interesting to say about the market. Anything new? I mean, chop, 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 and maybe avoid. One thing I was watching, and again I got played, was I was playing the fact that DXY had bottom. After the reclaim of trade, I was expecting finally DXY to move up. Didn't happen. All we got was a break, retest of low of the range, and DXY is still unable to get some traction with momentum, finally letting dollar go higher. You can see the same thing inversely on Euro USD. I was expecting its volatility to start to climb back up and Euro USD to break trend. Didn't happen. You are getting actually the same kind of pattern that you are getting on gold. So my bias played me on Euro USD, and that was another reason why I didn't take the long gold, which I should have. I know that you were talking about momentum building again on gold. I think it was last week, and clearly it was the right play. My bias played me. So for people who want to short your USD like me, definitely not the time. Volatility is doing lower high, lower lows. And you can see here matrix. So in gray, that's the volatility. Volatility is starting to get very compressed. So I would not be surprised to see another leg higher in your USD. And as I was saying, in gold. So gold is doing the same thing. Volatility is starting to get back down. You have trade and trend crossing. The entry was around there. If you took it, great. I think you're holding a winning position. But yeah, didn't take it. Now let's go to VIX. So another reason why I'm not very enthusiastic about the overall market is because, so if you are using my Vola script, here, sorry, the value. So 54.5 is the value of the max where trade of VIX, the vol of VIX gets to before we get some kind of vol event. So I marked two other examples like this. Let's get there. So 2020 June and 8. So here we got to the max daily trade value, and what you get is a spike in vol all of a sudden. So another date like that, so you can see here the black line reached the max. Another one, 22nd of March 19. Here we get to max and we get a volume spike. So clearly, I would guess market participants need a dip to buy. Nobody is going to buy this chop. So my expectation would be maybe next week we get some kind of vol spike lasting from I don't know, like 2 days to a week to allow actually market participants to get a dip. So that would be my expectation right now. I hope I will be watching to get in for this one. So CL, I'm not gonna go into the why I played CL. I think CL long. I think Vi, you provided the levels for USO. So if you are marking those levels, the monthly levels Vi is providing, you will see where the entries could have been. As for a swing play in oil, I think we are getting near something that could become interesting. So you have trade of volatility that is going down. Volatility is trying actually to break below trend. So what I want is first I want to see volatility break below trend. And when the play will be when we have the cross of trade and trend. This one is pretty straightforward on CL. When you see this pattern, you just take the long. You don't need to think about it. You just take it. You put your stop at the low of the range, and you can enjoy the ride. I think this setup is coming soon. You can also see here in gray, volatility of oil is definitely looking better compared to what we had here. So I think this one is brewing. I would encourage you to monitor oil in the next couple of weeks, I would say. Maybe the next 2 weeks, 3 weeks, there is a good long brewing. Now, Bitcoin, the target was around 112. So I was greedy. So I took some of as we were moving into the 111K area, but I still kept a good chunk because I was expecting a break of 112K. And Vi, after the show, you said, why you didn't take it? I mean, sure, we can go to 112K, but it was the target. We were almost there. You should have closed the position. So now, in retrospect, it's very easy to say, yeah, I should have. So yeah, I had to cut the position as Bitcoin was breaking a trade. And what I don't like currently is you have actually volatility above trade of volatility, and it's making volatility of Bitcoin is making higher low, higher highs. So very dangerous spot. On the opposite side, I think Raghav tweeted it. You have low of the normal range on MFR and the low of the long-term range, uh, which are about to catch up to each other. So well, you would get what we call a downside cap. A downside cap is actually very good. You should expect a bottom when this happens. So I'm definitely watching Bitcoin for more sell-off, but I'm also watching what's gonna happen when maybe we hit this downside cap. I think Vi will talk about maybe the levels he's watching, but I can give you a quick overview on here. So what we have are here we have quarterly level, monthly level, and yearly level in this area. So this area would actually match with potential downside cap. So I'm going to watch this area in the, let's say, 93 to 98 with interest. Now the elephant in the room and the best bet of why the market is going nowhere are yields. So yields are still bullish trend. Volatility was going up in the past 2 weeks, but yields are not making lower low. So my expectation would be that the 10-year and the 30-year will actually hold a trend, and we could get another move back up. So the fact that the yields and of course, the bonds are bearish trend, but the yields are bullish trend, is not helping. So I think until you see this move actually come down, maybe a break of trend, it's gonna be tough to have to play swings, long-term swings on the overall market. So yeah, I mean that's gonna be my talk for today. Very short. Just avoid the chop. Maybe we get a dip next week with some kind of 2 day to 5 days vola event. I'm gonna watch to buy this dip. I'm watching Bitcoin with downside cap and the area I just mentioned. I want to buy. I want to buy there. And for the stocks, I guess, Vi, you're going to talk about the levels, and it's going to be more interesting than anything I would say. So, giving you the mic now.
Oh, no, no, it will not be more interesting. Thanks, very good insights. I actually have some uh, opinions about where was the good spot park to park the money in equities, and actually the answer was quite simple. It was small caps because small caps were actually showing quite a good momentum. But before I start, we have a question about your sell and mega sell signals. Vec says that sell and mega sell signals have been printing on major indices and some Max 7 stocks. So are we headed down or chopping around?
Yeah, very good question. So, first of all, the trending asset, the ones that are basically reaping, and you can see that, for example, NVDA and some others, they are printing sell. The sell are gonna print when you have a crazy move up. So you don't use sales and mega sales uh, as a 1 point trigger. First of all, you need those to trigger on different asset classes at the same time. So that's why, for example, you watch correlation. I mean, you should be watching those sales, those buys on currencies. So, for example, the dollar. You should be watching them on yields. You should be also watching where we are in the overall market. So let's say we are at a point where ES would reverse, and you have NVDA, Meta, Google printing cells. So you would be thinking, okay, maybe there's a place to place a short. And now the problem is most of the stocks you are talking about, because of course I'm watching them, they have had a crazy move up. They are trending like insane. Everybody's parking their money there. And why? Because they are bullish, high Hearst, and they are just printing levels as they are moving up. So no, I would not use the sales currently printing on those as a signal. The signals I'm watching, I mentioned them. It's basically the VIX at trade max. That's the one I'm currently watching. And even after we get some kind of pop in VIX, I'm gonna watch to buy a dip. So I'm not looking for something more than this. I think when we're gonna expect a huge move down on the market, we're gonna say so in the show. I know, for example, Vi had the almost the exact top from the previous top on ES, and next time I'm going to tell you. But for now, it's just signals of overbought stock with high Hearst, etc. Not expecting some crazy move down with them. I hope it answers the question. If you want more, please rephrase.
Thanks. Okay, so uh, let's see what's happening in the markets from my perspective. Okay. Tesla. So I think you saw that tweet with my order on Tesla. So that order expired without getting filled. So we will see what's going to happen tomorrow. But first, as always, we will start with overall situation with correlations. And we will start with stock bond correlation. So if we are looking at SPY TLT correlation, you will see that on a 21-day period, actually we have a positive but very low correlation of stocks and bonds, which is uh, actually a sign that we may have some volatility to both sides ahead, because basically whenever I see positive stock bond correlations in a mid and short term, I just think, okay, this market is not healthy. And of course, we saw that we had plenty of opportunities to see what's how these last couple of weeks look like. Even though market was not looking bearish at all, but it was not going anywhere. So, as Raphael said, we had this range, and market spent, when it comes to equity indices, market spent quite a lot of time close to their yearly open, which is a major level, and yeah, up down, up down. It tried to go up, then it came back, and so on. What I see, and why SPY TLT? Because we are using regular trading hours for stock bond correlations, because actually, if you look into futures, so for example, ZN and ES, you will see quite a different story. And because, first of all, TLT, the one that we are using, that is not actually perfect proxy for ZN or the 10-year. And also, we had a lot of moves in extended trading hours. So that's the reason. But I always suggest people to just look at SPY TLT. It's a very good proxy. But keep in mind that we are in a, when it comes to SPY TLT, in a slightly positive environment. If we change the period to a 10-day as an example, you will see that again, SPY TLT is in the positive environment and actually higher. And now if we go to TLT chart, I want to show you that on a rolling basis. So yeah, now let's change the period to 10 days. And now you will see the chart of SPY TLT correlation, because this script is using SPY as a default value. So now the TLT correlation to SPY, and we see that even though it was very high on a short-term period, and of course short-term periods are very sensitive, so that's why it's not the only thing you should use. You should always watch longer periods as well. But basically, we can see that we spent quite a long time in the positive correlation environment, and now these correlations are sloping down, still positive, but sloping down. So we need to watch that. And whenever I see uh, short-term correlations going to the negative on SPY TLT, then maybe I will consider rethinking my views on bonds, and I will touch on my views on bonds a bit later. Now, 21 days a bit different. So yeah, you see the slightly positive correlation, but it's basically chopping around. So chopping around. So it shows us quite a promising thing, that on a short-term basis, these correlations are sloping down, and on a longer-term basis, they are quite stable. So we will see. For now, when it comes to stock bond correlations, what I want to see is a short-term 10-day correlations approaching zero or negative territory, and negative territory would be quite nice. So yeah, and the indicator of crowdiness, so which is the average sector correlation to the SPY. Yeah, after our show, we had quite a big spike in these correlations, because we had quite a nice momentum for a couple of days in these stocks, and basically all sectors were up, and all leading. But for example, today's move was not the same. Uh, First of all, I want to remind that correlations are not directional. So if all sectors are going down or are going up, it doesn't matter. Correlation would increase. But for example, today, if you monitor the other sectors, you saw that basically dispersion was definitely not really high, and we had this move in tech stocks like PLTR and Tesla. Of course, now we know why, but basically all this move to the downside was basically caused by couple market constituents. So it was not a very crowded sell-off and nothing to be too worried about. But yeah, now we saw these correlations going down, and I will monitor that. But for now, I see nothing to be really concerned about the market, and on a longer term basis. On the longer term basis, we will see quite a different situation and basically a very similar picture compared to stock bond one, where basically now we are just chopping around in quite low value, so everything is still looking not too risky. So that was the reason why, for example, I'm not shorting the market today, even though we had quite a few reasons to do that. One of them was the break of yearly open, and another one, of course, was the move in quite important mega cap stocks. But I'm still not shorting this market. And yes, so now with correlations uh, discussed, we can move to what's actually going on in here. And actually, I will start with Bitcoin, which is not the most usual asset for me to start with and cover. But I saw a lot of people, well, macro accounts already buying Bitcoin, and some people already bought it way higher. Um, but now, actually, I'm eyeing a couple of levels, and I'm thinking that maybe soon we will get quite a nice opportunity to buy some Bitcoin, or if you are long from all the way from way lower, maybe to add a little bit to your positions. But basically, what needs to happen, we need to go below 100. I'm eyeing 98 to 95,000 areas, and then yearly pivot of 93. But first, I will watch, of course, from level to level. So 98.9 to 95.3K will be areas where I will be watching for reaction. And of course, with pretty tight stops, I will maybe try to buy the Bitcoin. So I just wanted to say that patience always pays off. I was not buying Bitcoin in random places, especially uh, when we saw with this retracement from 112 level. And actually, I believe that 112 was the actual high. Yeah, high was exactly 112,000, 112,000. So that was quite a nice target and the bounce. But yeah, so we are approaching area where I will again be interested in getting some bullish exposure on Bitcoin with very small risk and tight stops. So we will see. I just wanted to mention that areas to look at are 98,000, which is a base case target for this quarter, which of course was broken, and now we are coming back. So we will see how it's going that. And the base case downside target for this month of June, is 95. So if I see any reactions either here or here, of course, better would be the monthly target. I will definitely buy some Bitcoin, and yeah, my stock will be really tight. Uh, Last time we had quite a nice trade from yearly open, so we'll see how it goes. But I'm still thinking that Bitcoin has room to go, and major targets for the year and overall move are way higher. Of course, the target that I I believe I said on the last show or so, has no time frame. It's the target for the next bull cycle, but I actually am eyeing as high as 144,000 or something. But that, of course, there are plenty of levels before that, and yeah, so we need to act accordingly. So I still think that Bitcoin will have a move up, but now the question is, before making that move up, how low it will go. And actually, we are approaching a couple of areas where I will be interested in, and you see these areas here. So these are the levels for the Bitcoin. And now let's go to the stock. Oh, I believe I can just go here. I know. Okay, let's stay here. Tesla. So Tesla, what is the situation with Tesla? Yesterday we closed below the monthly pivot, which is as simple as the monthly opening price. And yeah, and today market fell. It failed to stop at the base case target, and now we have this quarterly pivot. And quarterly pivot is 263. And yeah, so I tweeted that if market goes there, I will be willing to donate some money to Wall Street gods. But oh yeah, next time that order was not filled. So we will see what tomorrow brings and where this stock will go. But basically, we have major areas to watch, which is first area is of course 263 to see what will be the reaction there if market reaches, or maybe we will have a break above this level. But of course, before that, we need to see if that break is really real. And if we have a breakdown below 263, then we get 246 and all the way to the yearly target 215, which actually the yearly downside target was the actual low, and actually a couple of times this year already in March and in April. So that will be big, and I expect a big reaction to that level if we tested the third time. And of course, bad news is that if Tesla decides to break a yearly level, then we have move way lower, and then basically nothing will stop us. But yeah, for those who are bullish Tesla for one reason or another, now is definitely not a place to do something unless you see 263. And that tweet actually was quite a good example how I view trading and the markets. Of course, it's not the only way I trade, but sometimes people ask, "Hey, how you trade levels or ranges or whatever?" And I always say, "Oh no, I almost never buy unlimited risk positions or just naked equities. I usually do option combinations." So, for example, in this scenario, the only strategy that I would consider would be a call or put debit spreads, depending on your directional view. Because this market, and especially stocks like Tesla, can be brutal to your trading accounts if you just have exposure with unlimited risk, or your stops get slipped, or big moves happen during after hours or pre-market. Because remember that real stop orders, they only protect you during regular trading hours. That's why I always prefer options. But yeah, 263, 295, 246, and then 215. These are the levels to watch. So for those who want to buy some Tesla, these are the prices. With tight stops or with limited risk strategies. That's the only thing I can stress, because I need to stress it a lot because it's very important to manage your risks here. So let's go to TLT, to bonds. Yeah, so bonds are positive for the month, but basically now we had this quite an interesting day, and one of the reasons why it's very hard to be bullish bonds is the small caps, the Russell. and Russell showed quite a decent positive momentum during these 2 weeks, and usually then small caps have quite a strong correlation to bonds. You can always check that or on MFR or just using correlation scripts, and you will see that basically bond small caps and interest rates are very, very related. And one of the reasons, of course, is because there are plenty of financial companies in the small caps, but still. So I will watch Russell because you see that, for example, Russell is flat on a day, then ES and NQ had quite strong down days, especially NQ. And that was the one thing that I was talking about. Dispersion, the move today was basically not concentrated, well, not coordinated. It was basically the tech move. But yeah, so keep that in mind that below 85.29, we will go to 83.35 or all the way to 82.30. And these are momentum targets. Maybe I need to explain it in more detail because with momentum targets, the issue is that if these targets don't hold, you can't be a hero. It means if they don't hold, you will definitely see the next one. So if you execute on these targets, keep that in mind and have tight stops because that's the whole point. And that's why I'm always saying breakouts, not bounces. You need to trade breakouts, not just place limit orders on these targets. But yeah, as low as 83.3 on TLT, which is still our target for this quarter, and now we are in the third month of the quarter. So that target was already the bottom of this quarter, so it worked perfectly. But we can easily retest the target if bonds will have another leg down. If bonds are not going down, we will see 87.30 and then all the way to 88. But let's see. Monthly pivot is here at 85.29. So if you see TLT below that price, that will be your signal that there is no business in being long this asset. But these are the targets. Now I want to talk about IWM actually, because IWM looks quite different from others, and actually in two ways. So there is two sides of the coin. First of all, IWM is way down on the year, so that's one thing. Because ES and NQ, they were flirting with yearly open, but spent quite a few days and even a couple of weeks above that. But it's not the case with small caps. So you can see that basically yearly open is 222 or almost 223. So we are not even close there. So of course, if you are thinking long term or year to date, IWM is a laggard. But actually, for the last couple of weeks, we had quite a nice momentum in IWM, and of course, it's something that you can't ignore. But yeah, monthly pivot is like I tweeted, monthly pivot is 205 and quarterly pivot is 198. So if we see breaks of those, you will for sure see the quarterly level and then 197. So keep that in mind. If you are holding IWM and you see 213, it will be a perfect spot for you to reduce your positions because that's the whole point of this. It will give you a clear places to transact, and same like today I tweeted about Netflix. It doesn't mean that you need to get rid of your entire position if you plan to hold long term, but it really makes sense to take profits if you see the target. So these are the numbers. Yeah, so this is the small caps, and I will not go through all the targets that are pinned on my profile on Twitter because first of all, it would take a lot of time, and second of all, I would basically repeat the same numbers that you can see on my pinned tweet for the month of June. But basically, my bias for now is neutral. I'm still not bearish because it's hard to be bearish this market, and I said that 2 weeks ago also. And yeah, so now we are flirting around very, very important levels on ES and NQ, and the next target to the downside on ES would be 58.40. But actually, I always prefer to transact when the momentum confirms the move. So if we are talking about shorts, maybe I would only be short below 58.40 or something like that. And no, you will not miss anything. Usually you miss way more if you chase moves compared to when you transact when market confirms your views. So it's just my opinion. And the gold, I wanted to touch on the gold because we have this major level of 3,332, and you already know what that level is because it's an expiration of the previous futures contract. So basically, it's the pivot for now. It's the pivot, and we are above that. So yeah, and today market tested again the quarterly target for this quarter, which is 34.26, and now we saw a reaction to that level. It failed to break it, but these are my targets. If we see a break below monthly pivot, it will not be bullish. It will not be bullish at all. So watch that. It's 3,323, which is almost the pivot from the settlement price. And to the upside of 34.46, 34.85 would be very major levels. And I will not talk about the levels farther away because first we need to reclaim these levels that are nearby. But my overall view on gold is actually not that bearish. I can't say, oh, I can't say that gold is weak because obviously it's not weak. We have quite a strong bullish momentum, and it was a good trade, and for months and for way longer, it was a really really good trade. So now whenever I see the price which makes sense to execute in, I always do something, either the futures options or futures themselves, but yeah, for now I have no positions. I closed one of the spreads like 3 weeks ago, and after that I was not touching gold. But yeah, it was something I wanted to mention that oil. When it comes to oil, I will talk about USO because USO actually is trying to come back. It is trying to come back above the base case target for this quarter. And actually, it was very weak, very bearish looking because this quarter we had basically not only base target but bear target, and this month we have quite a low target if market decides to go lower, which is 65.9. But of course, from time to time. So now I want to see oil back above 70.35. If I don't see that, I will not be interested in oil. And most likely I would only do very conservative trades because now we see a lot of narratives and a lot of macro people. Some are saying that oil is going up, and others say people say that Trump tries to lower the oil prices, which I don't know if it matters. At least in my process, I don't have any place for these narratives, but it causes volatility, and usually for equities and trending things like gold, volatility is a trader's friend. But when it comes to oil, usually volatility means more that you will just get chopped into pieces. So just be careful. But above 7.35, I would consider maybe some USO options. Yeah, so my overall view is that watch correlations. I'm still not calling any end of the world or something, but definitely there is a slight change compared to 2 weeks ago because I don't want to be long this market today. Maybe tomorrow will change. We will have non-farm payrolls and others, so maybe some news will take the market to the levels where I will be interested in doing something. But at least for now, I will just watch and yeah, of course I will watch Tesla because Tesla is interesting currently just to see and maybe participate. But if I decide to participate, it needs to be lower, way lower. So yeah, these are my views and manage your risk accordingly because I agree with Raphael on one thing. We can see volatility spike next week or even tomorrow. Of course, we will see the reaction to non-farms, but yeah, and if you see that, yeah, it's very important to be careful and conservative and manage risk accordingly. So actually, I want to see some volatility because maybe I would have some interest in buying some more stocks if we get a decent leg down to at least monthly bearish targets. Yeah, so I hope it was useful.
Yeah, but just to also to tell users that all the levels you are showing will soon be released for elite users. And maybe we will do another show. We will surely do another show specifically on those levels before the release of this to the elite subscribers.
Oh yes, of course.
So
Yeah, so there is a question about currency. So yeah, we have signals for all major currencies and currency indices and uh, forex pairs and yeah, of course. And I believe Raphael touched on dollar today, so there will be a recording of this.
yeah, I think that's it.
Yeah, and in my pinned tweet, there are targets for euro dollar and the dollar yen, because I think that these two are the most important currently, especially yen. Watch yen and bonds, and you will be good. And it's a great macro indicator just to see what yen is doing and how it reacts.
Also, you said something very interesting, very important regarding the levels. Is um, I know you usually don't buy, you don't buy them, you don't consider them as like, for example, let's say a stock is going down and you have a level, and you would be like blindly buying this the cross on the downside. You are looking actually for the breakout. So that
Yes,
will be something I think we will focus on the specific show we're gonna do on the release about levels, is how you should actually trade them. And another thing, because it's a question that comes back often, is how do you use MFR in combination with that? We have addressed this topic on the Twitter show we did, but I think maybe we will do with screen share so we can actually
yes,
explain
because the,
everything.
the problem with that Twitter show was that it was not recorded for some reason. So there is no recording. But oh yeah, it is very important, and it's always about the range. Targets are not replacement for range. So, but when you see good upside downside ratio on ranges and you are interested in buying something, at least you will know if this is the right spot to buy or not. Because the range is a risk profile, it's a risk management tool, but a lot of people are just using it to buy or sell. So these targets will be very helpful to avoid these mistakes.
Mm. I'm looking, but yeah, no more questions.
Yeah, so then maybe we can keep this show short. And yeah, so again, I will repeat the same thing. I'm 100% sure next 2 weeks will be very interesting as usual. Uh, And most important is, of course, manage risk. Don't take crazy positions. And yeah, so see you in 2 weeks. Thanks, Raphael. Thanks, everyone. Bye.